Hi guys, thank you so much for joining me. Before we get to today's video, I wanted to let you know that my new book, The Ladder or the Grind, and personal exploration of career choices between employment or entrepreneurship comes out on Amazon on March 1st, 2020. In it, I go through all the decisions and factors that go into this career choice. I even interview other people who are both entrepreneurs or employees and talk to them about their choices and the paths that they chose. I hope you'll check it out. I'll have a link to it in the description below. Hi everyone, hope you're doing well today. The stock market has been absolutely volatile this past week, going up thousands of points and down hundreds of points and up again and down again. And yesterday it was down over 2,000 points. So we've been on a bit of a wild ride. And we've been on such a wild ride that the stock market, the Dow Jones, actually broke what's called one of its circuit breakers. And what those are sort of benchmark amounts that the market is allowed to drop before all trading has to pause. And the reason the market does that is that pause gives investors time to calm down a little bit, think about what they're doing, because it is human nature that when people start selling off and the market starts dropping dramatically, other people rush in and start selling, and it adds to the confusion. And just yesterday, Monday, I believe the 9th, March 9th, the market actually tripped one of its circuit breakers that it has not tripped since the 90s. And that circuit breaker was a drop of 7% on the Dow Jones Industrial Average. And what happens when that was tripped is there is a required 15-minute pause in all trading, again, just to give people a chance to sort of collect their thoughts, relax a little bit, and stop letting fear take over. There are other circuit breakers that were not tripped this time around. There's a 13% mark where another 15-minute pause is instituted. And then there's the big one, which is a 20% drop when all trading halts for the entire day. So the market did trip that first 7% circuit breaker on March 9th yesterday. What does that mean for investors like myself and for folks like you? Well, here's what I would tell you. If you look at what a lot of investors have been doing, they've been building up their cash position for instances like this. They've been sort of stockpiling for a while, preparing for maybe a recession, or in this case, we've got the coronavirus and some changes to oil agreements impacting the markets. And when you have your cash set aside and waiting for you, at least some of it, it gives you the opportunity when we see this kind of dip to buy. And that's what I'm really looking to do. This is not a recommendation. You should always check and get your own advice from a financial advisor. But from my perspective, this type of drip, this circuit breaker trip of 7%, this 2,000 point dip in the market, for me is a buying event because I can buy low when things have dropped dramatically. And I do feel like once things calm down from a coronavirus perspective and some other things, that we're going to see the markets come back down the road. I don't think it's going to be in the next couple of weeks, but I do feel like the markets will recover. And the reason I feel that way is because up until the coronavirus and the spread of it, the United States economy was doing great. Jobless claims were doing great. GDP was great. All the indicators, housing, everything looked really good. So I do think if that holds and we can weather this coronavirus storm long enough to sort of see it dip back down. Keep in mind, in China, it looks like they're sort of starting to see a slow in a number of cases. So we can expect it to follow that type of arc here in the United States, I think. So this is a buying event. It's a great chance to go in, get some stocks at a really low price, hold on until the recovery, and maybe even flip them and make a nice return. Hope that information helps. Have a great day.